Hello and good day. For today, our topic is corporate liquidation and reorganization. This is part 1 of the corporate liquidation and reorganization, and there's a separate video for the part 2 of the corporate liquidation and reorganization. In this video, I'm going to discuss the basic concepts of corporate liquidation, including the statement of affairs. The question is, why do corporations liquidate? Corporations liquidate because of insolvency. Ang insolvency, nangyayari yan kapag yung total liabilities ng corporation ay mas malaki kaysa sa kanyang total assets. Dapat mas malaki yung total assets kaysa sa total liabilities kasi saan ba kinukuha yung pambayad ng liabilities? Kinukuha yung pambayad ng liabilities sa assets. Kung mas malaki yung total liabilities kaysa sa total assets, mahihirapan na yung corporation na bayaran ang kanyang liabilities. Insolvency and illiquidity are two different terms. Although insolvency and illiquidity are two different terms, they have similarity. Both insolvency and illiquidity are inabilities to pay off debts. That's why kapag sinabing insolvent yung corporation or illiquid yung corporation, that means the corporation has financial difficulty to pay off its liabilities. Their difference is that in illiquidity, there is a shortage in cash or liquid assets. While in insolvency, there is a lack of assets. Liquid assets are assets that are easily converted into cash, such as cash equivalents and marketable securities. Those are examples of liquid assets. Sa illiquidity, there is only a shortage in cash or liquid assets. That means hindi enough yung cash or liquid assets na pambayad sa liabilities ng corporation. Pero sa insolvency, kahit pagsamahin mo na lahat ng assets ng corporation, hindi pa rin enough yung total assets para mabayaran yung liabilities ng corporation. Recall that liquidation is the termination of business operations or the winding up of affairs. It is a process by which assets are converted into cash, liabilities are settled, and any remaining amount is distributed to the owners. As you can see, pareho ang process sa corporate liquidation at partnership liquidation. In corporate liquidation, the assets are converted into cash. Paano ba kino-convert yung assets into cash? Of course, the corporation will sell its assets. After the conversion of assets into cash, the liabilities are also settled. That means the corporation will pay its creditors. And after paying its creditors, the corporation will distribute the remaining amount to the owners if there is any remaining amount. Next, measurement basis. Sa assets, ang measurement basis ay realizable value. This is estimated selling price minus costs of disposal. Sa liabilities naman, ang measurement basis ay expected net settlement amount. Next, financial reports. There are two financial reports usually prepared by liquidating entities, and they are first, statement of affairs, and second, statement of realization and liquidation. I'm going to discuss the statement of affairs in this video, but the statement of realization and liquidation will be discussed in a separate video that is included in the second part of corporate liquidation and reorganization. What is a statement of affairs? A statement of affairs shows the financial position of a liquidating entity, the assets that are available for sale, the claims of creditors to be settled, and the claims of the owners. In other words, the statement of affairs shows the assets, the liabilities, and the equity of a liquidating entity. Kasi kapag sinabing financial position, ang tinutukoy dito ay assets, liabilities, at equity. Kapag financial performance naman, ang tinutukoy ay income at expenses. The statement of affairs shows the assets that are available for sale. Aside from that, the statement of affairs also shows the claims of creditors to be settled. Yan na yung liabilities. And aside from that, the statement of affairs also shows the claims of the owners. Yan naman yung equity. The statement of affairs is similar to a regular statement of financial position or balance sheet, except that assets are measured at realizable values and liabilities at expected net settlement amounts, and the presentation is different. Sa regular statement of financial position or balance sheet, klina-classify natin yung assets into current assets and non-current assets. Klina-classify din natin yung liabilities into current liabilities and non-current liabilities. But in a statement of affairs, hindi natin klina-classify yung assets into current assets at non-current assets. Hindi din natin klina-classify yung liabilities into current liabilities and non-current liabilities. In the statement of affairs, assets are classified into the following. First, assets pledged to fully secured creditors. Second, assets pledged to partially secured creditors. And third, free assets. Assets pledged to fully secured creditors are assets with realizable values equal to or greater than the expected net settlement amounts of the related liabilities for which the assets have been pledged as security. Ang una nyong gagawin ay i-check nyo kung naka-pledge ba yung asset as a security for a liability. Kapag naka-pledge yung asset as a security for a liability, i-compare nyo ngayon yung realizable value ng asset sa expected net settlement amount ng related liability. Kung yung realizable value ng asset ay equal o mas malaki kaysa sa expected net settlement amount ng related liability, then the asset is an asset pledged to fully secured creditors. For example, yung land, naka-pledge siya as security for a loan payable. Since naka-pledge yung land as security for the loan payable, i-compare nyo yung realizable value ng land sa expected net settlement amount ng loan payable. Kung yung realizable value ng land ay equal o mas malaki kaysa sa expected net settlement amount ng loan payable, then the land is an asset pledged to fully secured creditors. Next, assets pledged to partially secured creditors. Assets pledged to partially secured creditors are assets with realizable values less than the expected net settlement amounts of the related liabilities for which the assets have been pledged as security. As you can see, this is the opposite of assets pledged to fully secured creditors. Ganon din, i-check nyo muna kung naka-pledge ba yung asset as security for the liability. Kung naka-pledge yung asset as security for the liability, i-compare nyo yung realizable value ng asset sa expected net settlement amount ng related liability. Kung yung realizable value ng asset ay mas mababa kaysa sa expected net settlement amount ng related liability, then the asset is an asset pledged to partially secured creditors. For example, the equipment is pledged as a security for notes payable. Since naka-pledge yung equipment as security for the notes payable, i-compare nyo yung realizable value ng equipment sa expected net settlement amount ng notes payable. Kung mas mababa yung realizable value ng equipment kaysa sa expected net settlement amount ng notes payable, then the equipment is an asset pledged to partially secured creditors. Next, free assets. Free assets are assets that have not been pledged as security for liabilities. Yung 1 and 2, of course, naka-pledge yung mga assets na yan. Pero yung number 3, free assets, ito yung assets na hindi naka-pledge as security for liabilities. That's why it is very important to know kung naka-pledge ba yung asset as security for liabilities. Kung naka-pledge yung asset, then ang kanyang classification is either 1 or 2. Kung hindi naka-pledge, then free assets siya. Free assets also include the excess of assets pledged to fully secured creditors over the related liabilities. Of course, kung mas malaki yung realizable value ng assets kaysa sa expected net settlement amount ng related liabilities, then merong excess. At yung excess ay makaklasify as free assets. In the statement of affairs, liabilities are classified into the following. First, unsecured liabilities with priority. Second, fully secured creditors. Third, partially secured creditors. And fourth, unsecured liabilities without priority. Unsecured liabilities with priority are liabilities that, although not secured by any asset, are mandated by law to be paid first before other unsecured liabilities. As the name implies, unsecured liabilities, of course, these liabilities are not secured by assets, meaning to say, no asset is pledged as a security for these liabilities. Also, as the name implies, unsecured liabilities with priority, These are legally mandated to be paid first bago bayaran yung other unsecured liabilities. Examples of unsecured liabilities with priority are payables for administrative expenses, unpaid employee salaries and other benefits, and taxes and assessments. Next, fully secured creditors. Fully secured creditors are liabilities secured by assets with sufficient realizable values. Fully secured creditors are also known as fully secured liabilities. Kung yung realizable value ng asset ay equal o mas malaki kaysa sa expected net settlement amount ng related liability, then yung related liability na yon ay classified as fully secured creditors. Next, partially secured creditors. These are liabilities secured by assets with insufficient realizable values. Partially secured creditors are also known as partially secured liabilities. Kung yung realizable value ng asset ay mas mababa kaysa sa expected net settlement amount ng related liability, then yung related liability na yon ay classified as partially secured creditors. Next, unsecured liabilities without priority. These are liabilities not classifiable under 1, 2, and 3 above. As you can see, the definition of unsecured liabilities without priority is a residual definition. Since kung hindi classified yung liabilities as unsecured liabilities with priority, or fully secured creditors, or partially secured creditors, then makaklasify yung liabilities as unsecured liabilities without priority. Let's now apply the concepts by answering problems. Problem number 1 is all about statement of affairs. Bye-Bye Corporation is undergoing liquidation. Relevant information as of January 1, 20X1 is shown below. Additional information, administrative expenses of 180,000 pesos are expected to be incurred during the liquidation process. The equipment is pledged as collateral security for the note payable. The land is pledged as collateral security for the loan payable. Requirements: A. Compute for the amounts of the following. First, assets pledged to fully secured creditors. Second, assets pledged to partially secured creditors. And third, free assets and net free assets. B. Compute for the amounts of the following. First, unsecured liabilities with priority. Second, fully secured liabilities. Third, partially secured liabilities. And fourth, unsecured liabilities without priority. C. Compute for the estimated deficiency. D. Compute for the estimated recovery percentage of unsecured creditors without priority. E. Mr. A, an unsecured non-priority creditor, has a 500,000 pesos claim. How can Mr. A expect to collect from Bye-Bye Corporation? And F. Prepare the statement of affairs. Let's start with requirement letter A, compute for the amounts of the following. First, assets pledged to fully secured creditors. Second, assets pledged to partially secured creditors. And third, free assets and net free assets. Unahin natin yung assets pledged to fully secured creditors. Recall that assets pledged to fully secured creditors are assets with realizable values equal to or greater than the expected net settlement amounts of the related liabilities for which the assets have been pledged as security. Therefore, the land is classified as assets pledged to fully secured creditors. Bakit? Ang realizable value ng land ay 1,300,000 pesos. Ang net settlement amount ng loan payable ay 750,000 pesos. Mas malaki yung realizable value ng land kaysa sa net settlement amount ng loan payable. That's why land is classified as assets pledged to fully secured creditors. Second, assets pledged to partially secured creditors. Recall that assets pledged to partially secured creditors are assets with realizable values less than the expected net settlement amounts of the related liabilities for which the assets have been pledged as security. Therefore, the equipment net of accumulated depreciation is classified as assets pledged to partially secured creditors. Why? Ang realizable value ng equipment net of accumulated depreciation ay 150,000 pesos. At ang net settlement amount ng note payable ay 500,000 pesos. Mas mababa yung realizable value ng equipment net of accumulated depreciation kaysa sa net settlement amount ng note payable. That's why the equipment net of accumulated depreciation is classified as assets pledged to partially secured creditors. Next, third, free assets and net free assets. What's the difference between free assets and net free assets? Ang free assets, ito yung assets na hindi plinedge as security for liabilities. Free assets minus unsecured liabilities with priority, that is equal to net free assets. That means, para makuha yung net free assets, kailangang i-deduct yung unsecured liabilities with priority sa free assets. Ang realizable value ng total assets ay 2,100,000 pesos. I-deduct natin yung secured liabilities or secured creditors, whether fully secured or partially secured. Fully secured loan payable minus 750,000 pesos. Partially secured note payable minus 150,000 pesos. Take note that this is up to the realizable value of equipment only. Since mas mababa yung realizable value ng equipment net of accumulated depreciation kaysa sa note payable or the expected net settlement amount of the note payable na 500,000 pesos. 2,100,000 pesos minus 750,000 pesos minus 150,000 pesos, that is equal to total free assets of 1,200,000 pesos. I-deduct natin yung unsecured creditors with priority or unsecured liabilities with priority para makuha natin yung net free assets. Estimated administrative expenses minus 180,000 pesos. Salaries payable minus 800,000 pesos. 1,200,000 pesos minus 180,000 pesos minus 800,000 pesos, that is equal to net free assets of 220,000 pesos. You can also compute for the free assets and the net free assets using the following. The excess of the realizable value of the land over loan payable is 550,000 pesos. Ang realizable value ng land ay 1,300,000 pesos. Ang expected net settlement amount ng loan payable ay 750,000 pesos. 1,300,000 pesos minus 750,000 pesos, that is equal to 550,000 pesos. Add cash 200,000 pesos and accounts receivable 450,000 pesos. 550,000 pesos plus 200,000 pesos plus 450,000 pesos, that is equal to total free assets of 1,200,000 pesos. Then deduct the unsecured liabilities with priority or unsecured creditors with priority. Estimated administrative expenses minus 180,000 pesos. Salaries payable minus 800,000 pesos. That is equal to net free assets of 220,000 pesos. Next, requirement letter B, compute for the amounts of the following. First, unsecured liabilities with priority. Second, fully secured liabilities. Third, partially secured liabilities. And fourth, unsecured liabilities without priority. Unahin natin yung unsecured liabilities with priority. Recall that unsecured liabilities with priority are liabilities not secured by any asset. And at the same time, these liabilities are mandated by law to be paid first before other unsecured liabilities. Since there are no payables for taxes and assessments, only the administrative expenses and salaries payable are unsecured liabilities with priority. Administrative expenses, 180,000 pesos. Salaries payable, 800,000 pesos. For total unsecured liabilities with priority of 980,000 pesos. Next, second, fully secured liabilities or fully secured creditors. Fully secured creditors or fully secured liabilities are liabilities secured by assets with sufficient realizable values. Therefore, only the loan payable is a fully secured creditor or fully secured liability. Ang net settlement amount ng loan payable ay 750,000 pesos. And the realizable value of the land is 1,300,000 pesos. So, sufficient yung realizable value ng land to secure the loan payable. That's why the loan payable is a fully secured creditor or fully secured liability. Next, third, partially secured liabilities or partially secured creditors. Partially secured creditors or partially secured liabilities are liabilities secured by assets with insufficient realizable values. So in this problem, only the notes payable is a partially secured creditor or a partially secured liability. Since yung realizable value ng equipment na 150,000 pesos ay hindi sufficient para i-secure yung notes payable na 500,000 pesos. Next, fourth, unsecured liabilities without priority. The definition of unsecured liabilities without priority is a residual definition. Since kung yung liabilities ay hindi classified as unsecured liabilities with priority or fully secured creditors or partially secured creditors, makaklassify yung liabilities as unsecured liabilities without priority. The unsecured liabilities without priority are notes payable 350,000 pesos and accounts payable 700,000 pesos for a total of 1,050,000 pesos. Yung 350,000 pesos, yan yung difference ng expected net settlement amount ng notes payable at realizable value ng equipment. So, 500,000 pesos minus 150,000 pesos, that is equal to 350,000 pesos. Next, requirement letter C, compute for the estimated deficiency. Ito yung deficiency to unsecured non-priority creditors. Iko-compare natin yung net free assets sa unsecured liabilities without priority. Ang net free assets ay 220,000 pesos. Ang unsecured liabilities without priority ay 1,050,000 pesos. Since mas malaki yung unsecured liabilities without priority kaysa sa net free assets, merong deficiency to unsecured non-priority creditors na 830,000 pesos. You can also compute for the estimated deficiency to unsecured non-priority creditors by comparing the total assets at realizable value with the total liabilities at settlement amount. Ang total assets at realizable value ay 2,100,000 pesos. At ang total liabilities at settlement amount ay 2,930,000 pesos. That is 2,750,000 pesos plus 180,000 pesos administrative expenses. Since mas malaki yung total liabilities at settlement amount kaysa sa total assets at realizable value, there is an estimated deficiency to unsecured non-priority creditors of 830,000 pesos. Next, requirement letter D, compute for the estimated recovery percentage of unsecured creditors without priority. Estimated recovery percentage of unsecured creditors without priority is equal to net free assets divided by total unsecured liabilities without priority. Ang net free assets ay 220,000 pesos at ang total unsecured liabilities without priority ay 1,050,000 pesos. 220,000 pesos divided by 1,050,000 pesos, that is equal to estimated recovery percentage of unsecured creditors without priority of 20.95%. Next, requirement letter E, Mr. A, an unsecured non-priority creditor, has a 500,000 pesos claim. How can Mr. A expect to collect from Bye-Bye Corporation? Imumultiply lang natin yung 500,000 pesos sa estimated recovery percentage of unsecured creditors without priority. 500,000 pesos times 20.95%, that is equal to 104,750 pesos. Mr. A expects to collect from Bye-Bye Corporation 104,750 pesos. Next, requirement letter F, prepare the statement of affairs. Of course, the statement of affairs must start with the name of the corporation. In this case, the name of the corporation is Bye-Bye Corporation. This is followed by the statement of affairs and as of January 1, 20X1. After preparing the heading, prepare 4 columns for the assets section. 1 column for book values, 1 column for assets, 1 column for realizable values, and 1 column for available for unsecured creditors. Sa liabilities, ganun din, prepare 4 columns, 1 column for book values, 1 column for liabilities, 1 column for realizable values, and 1 column for unsecured non-priority liabilities. Since na-compute naman na natin yung mga values na kailangan sa pag-prepare ng statement of affairs, you just substitute the values. But take note, just like in a statement of financial position or balance sheet, the total assets should always be equal to the total liabilities and shareholders' equity.